In today's financial landscape, one of the essential figures is the market maker. What role do they play? Let's take a closer look. Market makers buy and sell financial instruments on their own account in real time so that people participating in the market have continuous access to liquidity. They apply sophisticated technology and analytics to make the financial system more efficient. They keep the markets in motion. Let's say you're trading stocks. You click buy and purchase the stock. Seems pretty straightforward. But who actually sold you the stock? How is there someone available at that moment willing to sell you the right stock at the exact amount you want to pay? Market makers. Without these important intermediaries, the financial system would be much more inefficient. To see why, let's look back at the earliest days of the market. Before the New York Stock Exchange was born in the 1790s, if you wanted to purchase a stock, you'd place an order with a broker who would go looking in taverns and coffee houses for someone willing to sell it. If they found a match, the trade was completed and they took a commission. If the broker couldn't find a seller, there was no trade and the deal died. The floor of the stock exchange eventually replaced the taverns, bringing buyers and sellers together under one roof. It basically worked this way until the launch of NASDAQ, the first fully electronic stock exchange in 1971. Rather than brokers yelling orders on the exchange floor, people used phones and then computers. Trading became decentralized, with millions of transactions occurring simultaneously from all over the world. Volumes rose dramatically, tripling in the first decade of the 21st century. Today, when you buy a stock, market makers provide liquidity in a massively scaled, geographically decentralized market thanks to their investments in technology, analytics, and risk management. By executing billions of orders in a fraction of a second, sometimes buying or selling shares themselves so that you always have a counterparty, market makers have made trading more efficient. So you don't have to wait 5 days or even 5 minutes to make a trade. They've also lowered costs and delivered better prices, saving investors billions of dollars each year. The work of market makers benefits not only the individual investors trading stocks, bonds, or other financial instruments, but anyone whose money is invested in the markets, like people saving for retirement or education, nonprofit endowments, pensions funds, and companies raising capital. Operating at the intersection of technology, analytics, and economics, market makers are solving some of the biggest challenges in global finance, making markets more efficient, transparent, and cost-effective for everyone.